Good afternoon, guys. Welcome to another live session with me, Steve Ruff. I'm going to focus on the future of cable. So I guess that the pound in general today. A lot of fundamental news flying around. I think we'll go through a short, medium, and long-term view of where the pound is going to be. All the factors that are really affecting the pound. Obviously, it's really important that we understand that the Brexit situation has kicked off, but it's by far than over. I mean, again, these things take, months, years to really kind of filter through to the real economy. So some bigger kind of, bigger world picture ideas going on. And we'll look at the charts. We'll try and marry it up with the fundamentals and try and figure out if we can understand where value is going to be in the short, medium and long term. So for us, as always, the risk warning. Remember that spread betting and CFD trading carry a high level of risk to your capital. Consulted losses that exceed your initial deposit. They may be suitable for everyone, so please ensure you fully understand the risks involved. The information is provided here under no circumstances or an offer solicitation to invest. Nothing herein could be issued investment advice. Information provided believed to be accurate as it is produced. Education only. Content of the webinar is personal opinion of the moderator at nitrade.com. The content does not constitute financial investment or tax advice. Intrade.com does not accept any liability for content comments made during this session. So, I mean, we just take a brief look at the markets right now and just see what's really happening. We've seen very, very tight range in the DAX. So, again, this looks like a very nice triangle breakout formation. It's not really a pennant. We don't really have a good or a flag. We don't really have any kind of pole to go off. So this is just a pure breakout scenario. I guess stocks are still pretty high. So I would say that we're either going to see a big break on the low side, a bit of a long squeeze down below 10,563, and then maybe that'll bounce and go back up because the trend is still why we've got ridiculous low interest rates, people looking for any kind of return. That only seems to be coming from the stocks. Gold again, really ranging between 1336 and kind of 1356. Doesn't really know where it wants to go from now. It's got to make some inroads to the 1400 mark if we're going to see this sustained bull rally. And again, with concerns over the overpriced stocks, concerns over oil, concerns over everything and anything and everything in the world, gold seems to be again following old traditions and being a bit of a store of wealth in difficult times. Then really looking at the currencies, we've seen a bit of a strong move upwards on the euro. Again, I still believe that by the end of the year we're going to be at parity in the euro. Once the Brexit Article 50 is signed, some point early next year, I think the risk of contagion of other countries looking for their own referendum on being in the EU, and I think it's only going to be negative for the euro. But for now, the euro seems to be strong. It's certainly dipped buying on the low side. Dollar versus the yen had some problems. We're still above that 100 mark. Again, I think we're still struggling with the Fed after their FOMC minutes last night. Still, like a broken record saying the data dependent. But I mean, it's highly likely now we're going to see at least one hike this year and certainly one hike next year. So we're kind of banking on 4 hikes this year. So that's out the window completely. But I think with the UK cutting their interest rates, the Europeans still negative deposit rates, and Japan really just making a complete mess of things. I think the US has to really stay steady and at least commit to a couple of rate hikes over the next couple of years, and that's only going to mean that the dollar's going to get stronger. So a bit of a sell-off, but I still think sell high in the euro, buy low in the dollar. So getting back to what we're looking at today, the pound. So the pound has seen a pretty healthy spike today, and that's based upon, again, data, retail sales. I mean, we could just look at the economic calendar that FX Street, very kindly give us, and we're expecting 4.2 from the retail sales year on year, and we've seen a massive jump, and it is a massive jump to 5.9. Then we see the retail sales, the ex-fuel, etc., consensus 0.4, and came in at 1.5. Now, when you're talking about figures in economic terms, these are huge jumps. I mean, they're absolutely huge swings. You can say that retail sales have bounced because of any number of factors. I think a lot of the time, after the credit crunch, we saw unexpected data, and that people were actually just going out and buying. People, especially people in the UK, are sick and tired of being told everything's doom and gloom. They're sick and tired of saying you can't have this, this is, for your own good, blah, 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 blah. So when the Brexit vote was kind of coming to its run-up, people were just buying things. Why not? The world after Brexit, after we voted, it didn't just stop. The UK didn't just, cease to exist, did it? If anything, it's just shown how the politicians, especially David Cameron and the Leave and Remain campaign, were so different. David Cameron was saying, stay in because I know best. Stay in because if you don't, the fear of the unknown. And people just don't respond to these kind of things, especially not in Britain. We're a counter-intuitive type society. So he could say whatever he wanted, but it got to a point where, if it was going to be that bad, then people were actually probably, in a macabre way, voting to see what would happen if it would be the end of the world. But as we know, it hasn't. So people have been out there. People are out there spending. People are getting off their asses, getting jobs, because we know if you don't, in tough times, if you're the one doing the least amount of effort, that things are not going to go your way. So retail sales being, way above consensus is not, again, a massive surprise, but it certainly is, a reason when you look at the charts, to see these big spikes. So, we've seen the UK on the hourly charts. So every time we've hit a high, the markets have sold off because we're in that trend at the minute. With interest rates being cut to 0.25, with this idea that we're going to have year-long, trade negotiations, the uncertainty, the yada 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 yada. For technical traders, for fundamental traders, it means that it doesn't matter, what the outcome is. You're going to be selling high. So what I'd expect to see in this scenario, going through, my view on the pound is that although the pound is still a good place to invest long term, in the short term, you're going to see people sell it because in the interim, the news, no matter what it is, isn't going to be good. Now, this is good news, from a fundamental trading perspective. So people have bought the pound on strong retail sales. But the overall picture is that, we still have a lot of uncertainty. So I would say any spike gets sold off. So I would say when the US markets open at 2:30, if we don't make a new high, then I think easily the pound gets back to, 131142. And I won't be surprised by the end of the week if that entire move, that entire spike isn't gone, isn't completely retraced, and we're trading more around the 130 mark. Because, it's very much like the euro. The euro, at the beginning of the year, before Brexit, before even people were considering, the implications of the UK leaving the European Union, all the big players, Deutsche Bank, UBS, were saying that the euro was going to get to parity at one spot. No, and it's not a million miles away from that. Okay, it's just teetering on that brink. We've seen 9 months of selling to get us down there. We haven't really seen any significant, bounce back into the, the Fibonacci levels to say that the buyers are coming back into the market. So what we're going to see is the same in the pound. Every time we see a spike on the upside in the short-term trading, down to retail sales, down to anything, any positive, GDP data, any positive earnings, then that's going to be fine. But the medium-term picture, when I say medium-term, I'm talking probably post-Article 50 being, triggered. So probably up until Q2 of next year. That's the medium-term. The medium-term is that Mark Carney's still going to have to throw the kitchen sink to stop the UK, economy grinding to a halt or going into recession. Interest rates are historically low, and, there is the room to cut it to 0%. But I think that's, as we've seen in the past, that's not really a way to kind of approach things in the modern world. Once you've kind of opened that box, it's very hard to put the lid on it. And realistically, you have to look to normalise the economy, which the US are trying to do. We've mirrored the US, over the years, and it's only really the Brexit, kind of uncertainty that's throwing the spanner in the works. But, at the end of the day, as I've said, the Brexit is the main factor that is affecting the pound from the sell side. And again, as I've said, if you're a short, medium, long-term trader, it's only the really long-term traders, probably 2 years plus, if you look at whole positions, that will build big positions in the pound. All the short and medium-term traders are looking to sell the highs because that is the trend, isn't it? That is the trend right now. Until the Article 50 is invoked, then we still have that absolute uncertainty of what the future of the UK is going to be. Now, again, people have different views and different scales of how good or bad this could be. You know, we're the service sector industry, aren't we? In London, you know, we make our money from selling services, which there are going to be lots of and lots of demand for. You know, after Brexit, there is. You know, it's as simple as that. Your PwCs, your Ernst and Young, you know, your Deloitte, they're going to have teams and teams and teams of so-called experts that suddenly know all about Brexit and, you know, will help your company with, you know, this, that, and the other. So, you know, in that respect, it's not going to be that bad. But then, you know, will there be a crack in the financial sector? Will there be a crack in the banking sector? I mean, this is the whole point. It doesn't matter what I say, because I don't know what the outcome's going to be. But also, no does anybody else. Mark Carney doesn't know. Janet Yellen doesn't know. Mario Draghi certainly doesn't know. Nobody knows what the impact will be, because we haven't really got anything to kind of compare it to historically. So, again, in the short term, medium term, let's see how the market reacts on this. This is our kind of best indication of what the sentiment is for the pound here right now. So if we can't make a new high from this point and carry on from that positive UK data, by 2:30 when the US market's open, we're trading down here, then that just means we're still selling high in the pound. So if we just look at the pound's performance against other currencies, if you just kind of look at the weekly, then it's pretty much as we expected. You know, so the pound against the dollar, once we, you know, got the Brexit kind of, you know, vote announced, then we have seen that weakness against the dollar. You know, we've seen lots of tails to the upside, and, you know, the market, you know, hit that low of 127, and, you know, that is a good break point, because 127, you know, is a lot of analysts have been talking about that being a key decision point. Now, I see it as a key decision point probably second time around. I still think that we don't make a significant bounce in the pound against the dollar just yet. Again, especially when interest rates, if we do have an interest rate this year hike in the US, then we're going to see 127 tested. We'll probably get down to 126, 124, and then the long-term traders come back in. Because, you know, when you think about it, you know, if you're the 1%er out there, or you're, you know, a central bank, where are you going to put your money? You know, we saw the trouble that the Swiss had when it moved its peg from the franc. You know, you're going to put it in the renminbi. No, you're going to put it in the yen. Well, you see that the trouble Japan's having, you know, not just from an economic standpoint, but a social standpoint. You know, they cannot produce enough people to keep the model going. You know, people just aren't having kids. So the future for the yen, very scary. You're going to put it in the New Zealand dollar. Who would do that? I mean, who's going to put it in the Aussie dollar? So when you think about it, the UK has been around for a long time. The pound has been around for a long time. So the actual demand for the pound in the short term, as I've said, is in question. But this is speculation. You know, this is people jumping on the back of the Brexit, jumping on the back of, you know, the uncertainty of, you know, the short-term uncertainty of British industry. But the pound, you know, historically is at historic lows. So when historic lows are hit, the trend is generally they go that little bit further. So when we're hitting the lows as we are now, it generally goes a little bit lower before we see that bounce. Now, before the Brexit, I said that the pound against the dollar should probably be back to 164. I don't think that's going to happen by the end of the year. I think we can safely say. But I would certainly say in the next couple of years, we're back above 150, 160 easily. Because they will get to a point where you get to a low point in the charts and people just absolutely, and we're talking about people, I'm talking about the institutions, the central banks, the hedge funds, they just load into the pound. If we break these lows at 120, you know, to 127 and get down to 124, I will literally, well, I mean, I will buy as many pounds as I possibly can, because I know you just got to sit on it, and it's simple as that. You just have to sit on it. You know, the pound is historically one of the oldest currencies in the world. You know, it's one of the most historically recognised. At the end of the day, you know, we're going through a very turbulent time politically, but when haven't we? This is the whole argument that fell apart for me with David Cameron. It's like another 10 years of uncertainty. Well, I'm sorry, boys and girls. Have we seen 10 years of certainty in the last decade? Far from it. Far from it at all. So what's another 10 years in this same scenario? Well, it's just called life. So you're trying to tell me that there's going to be 10 years of uncertainty post-Brexit if we're outside the European Union? Good. Well, I don't really care. Volatility is good for my job. Volatility is good for the world of trading. So another 10 years like we've just had, well, it's not going to be that much different, is it? So this is the thing for me. So I think a short rally from these lows, you know, not just data dependent, but people just buying lows in general, it is absolutely fine. I don't really think we'll get much above 133.820. Certainly in this weekly candle or this monthly candle. And I think then, again, it's consolidation towards the low, and then we break to these lower levels here, and that's when the big players get back in. So the euro against the pound, we've seen the euro obviously strengthen against the pound. And again, that's an interesting one, because UK leaving the European Union obviously puts England on the back foot, but then once it's all done, it puts England on the front foot. And we're a smaller nation. We don't have the bureaucratic, nature of Brussels. Okay, I mean, people might argue we don't have the same clout because we're not in part of the European Union. But who's our best mate? Who's our ally? The US. You don't need a much bigger partner than the biggest economy in the world. So all this nonsense that we'd be back of the line for trade deals, as Obama said, there was no trade deal. So it was a nothing argument. There was no trade deal anyway. So we're back to the front of the queue because we're America's pal. It doesn't matter if Trump or Clinton gets in. They're going to want to go and take on the world in whatever way. They need that powerful moral conscience of the UK. So, again, this is where it gets annoying to me, because I hate putting the political arguments and political side into my trading, but it's just become part and parcel of trading now. I mean, I used to say that it was 80-20. Fundamental was 20% of making up the markets, and technicals were 80. But maybe it's close to 70-30, 60-40 at the minute. These are political movements that are shifting, the indices, the commodities, the currencies. So we've really, hit a good level, I would say, in the euro against the pound. And by all means, we could get above, 0.90, even get back to parity. But the thing is, as we get closer to this whole Article 50 and the kind of the reality of it, that we are actually going to leave, because there are still some people out there that believe that Brexit won't happen, that it's just a big ploy. But unfortunately, these are the dreamers of the world. So the FT have been big into this. The FT, I think they overstate how knowledgeable they are. At the end of the day is that, the FT is based in London. It deals with London people. It talks to London bankers. It talks to people with houses in London. It doesn't talk to people in Manchester. It doesn't talk to people in Newcastle. It doesn't talk to people in Middlesbrough. It doesn't talk to the real people that actually voted and said it was no. Don't read the FT. So, the FT gets quite arrogant sometimes, and it speaks to the same people and therefore gets the same answers. So what I'm thinking is that all across the political class, the upper middle classes, etc., they just don't see that the world is changing. There's a lot of unhappy, people that just don't think they're getting their fair whack and fair crack of the whip. So what I'm looking to see is that after the Brexit Article 50 is triggered, that we actually see European, countries think, well, actually, we're not particularly keen ourselves on the future of the European Union. This is where you'll see the euro again get slammed. So the euro against the pound has every ability, I would say, to quickly sell off and get back to, the 81 and 80. There's a definite possibility in the coming months that as that Brexit vote becomes a reality, because, right now it's gone very quiet, hasn't it? I'm not quite sure what's happening in the background, but it's gone very quiet right now. But it's all these, kind of backroom deals that are being done that, we can't talk a trade deal until Article 50 is invoked. Absolute nonsense. Absolute nonsense. There'll be all sorts of secret squirrel talk. These are politicians at the end of the day. They couldn't lie straight in bed. So just because, Angela Merkel comes out and says, there'll be no talking about, Brexit or any kind of trade deals until it's invoked. Nonsense. Utter nonsense. Politicians have been proved to be some of the most slimy, devious, they're all in it for themselves. So if you're an MEP and you might lose your job, you're going to be out there doing trade deals, you're going to be doing this, doing that, talking to people, guaranteeing yourself some sort of future. So there'll be plenty of stuff going on. And all of a sudden, if we see in, the first quarter, or second quarter of 2017, oh, hello, the UK all of a sudden done a massive trade deal with China, done a massive trade deal with the US. Actually, if you're, one of the kind of on the fringe European countries and thinking that, I'm not quite happy with this migration that's happened myself, actually. I'm not quite so happy with how my country's been turned into, a bit of a mini refugee camp. Actually, we should think about our future and our children's future. Maybe we should go out there in the world and, control our own trade deals. All of a sudden, that contagion comes in, slap, bang, wallop. The euro gets smashed. And when you see it, it can get smashed back down to 75. We could be back trading, at the 70s. Maybe sub 65 in 6 to 12 months' time. If the world kind of looks at our bravery, if you want to call it that, our naivety, our stupidity, whatever you want to call it, it's democracy. The British people spoke. We want to get outside the European Union. We're not happy. So that's it. And if we go out and make a success of this, mark my words, there will be ripples through the European Union like we've never seen before. So again, that's the more medium, long-term view. In the short term, I guess intraday trading, it seems to be dip buying. That it's still perceived to be that the euro is stronger than the pound, so we dip buy. So from that perspective, again, that leads me back to things like the pound against the dollar against the yen. When we're still hitting these all-time historic lows, it generally goes a bit further. So by all means, in the short term, you can buy some dips, but be very careful because generally, in my experience, that the bigger levels are hit further through to these low sides before they then turn around and bounce up. So dead easy. Euro against the pound, euro's going up because that's the base currency. People believe that the euro is stronger than the pound. Pound against the dollar, people are selling the pound because people believe the dollar is stronger than the pound. Pound against Japanese yen, same scenario. Pound weaker than the dollar than the yen going down. But I've said, the yen's got its own problems. So, you could look at every coefficient, every currency correlation you want. It's going in that the pound is the weaker of any currency right now. 30 years lows, da 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 da. So when you hit these points historically, they generally go a little bit further. But once you've hit these all-time lows, once you've hit these new all-time lows, that's when you get the big boys. You get the Soroses of the world, the Buffetts of the world. You get the hedge funds, you get the central banks, and say, well, history will just repeat itself eventually. The pound, historic lows, 30 years. Well, there's only so far it can go. People are still going to go to the UK. People are still going to do trade with the UK. The UK is still a very wealthy country. The UK still, is not just going to roll over and die. All of a sudden, 12, 18, 24 months' time, we see that these lows forgotten. We get back to a stable level, probably around about 40, 140, and then it's just 150, 160, 170 in the future because everything moves up and down. Everything moves in trends. I mean, again, the dollar versus the pound versus the dollar, it is what it is. I mean, again, if you're going to try and figure out where it's been in the past, I mean, we just do a Fibonacci. I mean, again, we're looking to it, get back to the 50%, which is 170, and that's from this particular down move here. If you want to see where it goes on the low side, just do a Fibonacci and look for some kind of reversal points, and that's pretty scary. I mean, if we look at this particular move here, comparatively speaking, if the market does want to break down and make new lows, then we get sub parity. We could even get down, to these lower levels down here, at 0.87. But I just don't believe there's enough. Don't believe there's enough money in the world, to be honest, to make the pound go down. I don't believe there'd ever be enough demand for other currencies outside of the pound for that to happen. So all I'm thinking realistically, that's too far a target. So I don't think we'd ever break parity against the dollar because I just don't see the interest rates being aggressive enough to go up. I don't see that there not being that correlation and that partnership between the US and UK not to continue. So everybody outside of that, when you think about that kind of the two economies put together, it still knocks the European Union really out the water. I mean, in kind of strength terms, in political power terms, I believe. So I still think that we get down to maybe 124, maybe 123 for a brief period of time, but then that's at the bottom for me. We just then continue after the Article 50, after the world doesn't end, after the trade deals come in, because we know we're very good at negotiating these things. Then we're back, get above 137, probably, spend a lot of time around 143 and the 150 mark going sideways, and then as time goes on, we get back to 157, 164, and 164 again. We'll have to see what the world does around that point, but I would say we still go back to 164. I mean, my view hasn't changed. We'll definitely go lower before we go higher. But then this is how you have to take your view and take your trading. If you want to get to 164, you might have to wait till it goes down to 123, or you might have to buy now and take on the pain down to 123, and then hold it for a couple of years till it goes back. This is the difference. This is what I'm saying. I know it's going to go in the short term. It's probably going to sell every high until the Article 50 is invoked, because we still have that unknown quantity of what's going to happen. So fear is still driving the market. But then after that, then it's all about greed. And I think that people are just going to realise that no matter what you say, that the future is slightly uncertain. But historically speaking, the UK has always rebounded from any crisis and remained stronger. And that's really how we stand right now. So I guess it's interesting times. You can't argue with the charts. You can't argue with the market. The market is selling the pound against the dollar. It's buying the euro over the pound, and it's selling the pound against the yen. So that's where we are. We're at the extremes pretty much. So again, as I say, we're at these extremes. Expect that little bit more movement to the extreme, and then the correction to come back. So any other thoughts? Any other kind of questions? What do you think of the pound? Have you got any buyers of the pound? Do we think the pound's hit low enough down now? I mean, it's interesting when you just look at the kind of old time frame view of the dollar yen. The cable, the pound against the dollar. I don't really trade the pound against anything else. I just don't have any interest in trading the pound against the yen or anything, or the other kind of products I've mentioned. I'm just interested in this correlation between the pound and the dollar. So I mean, you can see the movement on the 5-minute charts that it wants to, doesn't it? I mean, you look at the 15-minute charts, you're seeing this big spike. The market's looking going down. Bit of profit taking here, but realistically, the market by now should have got on to make a new high, because that's clearly, your kind of pennant or flag style scenario on the 15 minutes. So that is saying we haven't got back into the 50% of this up spike based upon the data, and I know that. So realistically, we should hit these lows. People should buy here, consolidate, and it should go on to make a new high and get to 132. That'd be a perfect flag scenario. But you see in the 5 minutes, don't you? This is why you should look at your markets and all time frames. Look at all these wicks to the high side. Every time it should go on to make a new high, get these buyers in. It's rejecting it and closing lower, rejecting it, closing that a little bit lower. So I'd say that if we break in the short term 130 or 1477, then we certainly get down to 131333. Now that would probably break the bottom of that flag. But this is the kind of your fundamental views tying in with your technical views, that no matter how strong the pound is in the back of that data, in the kind of short medium term, we still have that fear factor. So people are still going to be selling them highs in the pound. And again, look for a break now. See how the market reacts towards the bottom. If dip buyers are going to be coming in, they're going to be coming in there and trading the pound technically. If they're not, then people are trading it fundamentally, and still with that that Brexit uncertainty fear in the back of the mind. Okay, so maybe versus the yen. You had an engulfing candle on the daily 2 days ago, and we bounced. It looks like a triangle developing. Okay, so you must be hurting the economy for them. And then 125 is it for the low? Yeah, I mean, I think 125, is certainly, 125, 24 is where I can see it going for sure. Yeah, I mean, I think the yen for me is a difficult one. And, you can... I've had some big positions in the dollar yen, never the pound yen in the past. I find it very stressful to trade the dollar yen, because I know that obviously with the the yen, it's its relationship to the dollar and the amount of dollars that the Japanese hold. It's really difficult on any kind of movement to know who's really trading the markets and who's really making the movement happen. So I would say that the big thing with the yen is that, when you look at I don't really understand Japan. I don't really understand China too much either. I understand the West world, the Western world. That's what I understand. That's where I've made my money. I don't really kind of go into these emerging markets, because I just find them they're different than us. They think differently. This is the problem, you see. I can't get on board with this being told what to do. I like market forces, I like open markets. But the thing for me is, we look at Japan it's stuck in the 70s and 80s. It's stuck in this old way of thinking. If you think about the Nikkei, for instance, something like out of the Nikkei, it's something that's ridiculous. Like 80% of the Nikkei is majority state owned. Something ridiculous. I don't know the exact stat, but they're not creating enough people. They're not creating enough people coming through to pay for their massively aging population. So it doesn't really matter what the currency does. At the end of the day, as a society, they're starting to break down. Okay, they don't have enough people coming through to create business, to create jobs, to create wealth, to create tax revenues, to create spending revenues. They're just not creating enough people. So you look at things like that. One thing the problem in the UK doesn't have is with population, with immigration, people coming through, people wanting to work hard, people wanting to generate money and therefore tax revenue. So I would say the yen for me is one of these disasters waiting to happen. So I just stay away from it. So would I buy pound over the yen all day long? Because I understand that. But because I don't understand enough about Japan and their kind of, economy, I understand a lot, but not enough to kind of make big bets on it, that I just stay away from it. But, there will be people out there that know a lot more than me, and I'm sure they're, making their conclusions themselves. But right now, I'm just going off what the charts are telling me, that the pound is remaining weak and is selling away from the highs. So, I guess it's very difficult out there, as a trader, to kind of pick out that value and to see, where the opportunities are. And, especially like now when you see, gold coming away from the highs and the stock market selling off, the correlations are tricky, very, very tricky right now because they don't necessarily tie up in a way that we want. They don't necessarily tie up in a way that we can understand. So it's almost like each day's trading is not guesswork, but it's almost, how can I put it? It's almost going back to the basics of trading. It's like just cause the pound has spiked against the dollar doesn't mean the dollar's going to get smashed. Okay, doesn't mean the euro is going to spike against the dollar. Okay, it's almost like you've got to take each market right now under global economic constraints and global economic rules and trading rules in general, and then going into the individual products themselves and almost doing the same. So it's like if you're trading the pound anymore, it's not just about the correlations with the other currencies. It's not just about what's happening in the US economy and the general economic strength or economic kind of situation. It's about what's happening in the UK, and it's not what's even happening in the UK. It's what's going to be perceived to be happening in the UK. This is the problem. No matter what data comes out, great, retail sales, bang, bad though. We're still Brexiting, so it's bad. And this is the thing. Any product you trade now that's pound-based, you have to look at the UK data, through with a pinch of salt, because it doesn't necessarily mean that any massively great news like we've seen today in the short term is going to actually be good news in the medium or long term. So this is the main point I'm trying to make from this whole presentation, this whole idea of, the pound. I know where it's going to go in the short term, and it spiked today. So that goes against, what I'm thinking. But I'm not just selling it and sitting on my hands and waiting for 2 years. What I'm saying to you is I will sell every high in the pound because in the short term, any short-term blip, any short-term spike is going to be short-lived and it's going to sell off. So as I say, as I'm speaking now, the pound for me is going to break this 131.437, and I would not be surprised if we don't get down to 131141 by the close of play today, because it doesn't matter what the data says. Okay, the data is just an excuse for the central banks or for big hedge funds to come and smash into the pound, buy as much as they can, and then sell it in the afternoon. Okay, so until the Brexit Article 50 is invoked, this will be the trend, I think, that the pound gains strength on good data and good news, but then sells off from the highs. So let's see where we stand. Let's see where we stand by close of play. If we close high, I'm wrong. If we close lower, I'm right. And if I'm right, that trend will probably continue into the future until next year and we get a little bit more certainty of what's going to happen after we've left the European Union. Commodities are low, wheat and corn. I'd stay away from commodities myself. Panel 5, trade a little bit of oil, and you know that I trade a lot of gold. But yeah, the commodities deliverables, I just stay away from. They're not something I trade at all. But I mean, by all means, you know, enlighten us, you know, with the trends in wheat and corn. I'm always interested to hear other people's opinions. But yeah, I guess when you look at the markets right now, it's all about looking, you know, for what happened in the past to predict the future. And you know, this spike looks out of the ordinary, you know, especially in recent term trading. Every spike we see gets sold off, so I would expect this spike again to be sold off. So, any final thoughts? Any final questions? Anything you guys would like to ask? I mean, I don't really kind of sell anything these days. Never really have done. But what I'm kind of offering now, it is along this kind of vein. You know, I'm the chief market strategy instructor. I have been for 6 years. What I'm looking to do is I've had a great success rate in mentoring traders for these very difficult markets. So if you want to come over to InterTrader and join me, then I'll give you a free one-to-one session. I'll give you the charts that you see now. I'll, you know, again, give you a constant Skype support, just like this, and talks. So if there's anybody that does want to kind of come across to InterTrader, then, you know, just, you know how to find me. Just Google Steve Ruffley. Janet Yellen speaks next week. Will she be dovish? I mean, Janet Yellen's been a bit of a joke, full stop, hasn't she, really? She hasn't really kind of said anything. I mean, she just stays on this broken record approach of data dependent. I mean, we had a bumper non-farm payrolls. What does this woman want? What does she want? What does she want from us? What does she want from the world? I mean, I think she'll remain to be cautiously dovish. What's to be negative about? I mean, we've had the slowdown, you know, the predicted slowdown in China. We know about that. We've had the only expected Brexit vote. We know about that. I mean, what's left? You know, what's left in the US to be worried about? I mean, we've got the Donald Trump effect, but you know, what will be, what will be. You know, it's better the devil you do or don't know, whatever it is. I mean, like Obama did, you're going to inherit the same problems. And you know, Trump, will he be good? Will he be bad? Who knows? Who cares? At the end of the day, I mean, this kind of dovish or hawkish tone from the Fed is irrelevant. They have to put rates up. You know, they said they're going to do 4 rate hikes. If they don't do 1 rate hike at least this year, that will do more harm than good because they'll put too much fear through the market. And you know, and things. The markets will take over. The markets will dictate. If you keep playing games with the markets, you know, the markets are bigger than the Fed. They're bigger than the US. And if you keep playing games and not giving solid forward guidance and doing the things you said in the first place, then bad things will happen. So it doesn't really matter what tone Yellen has. If she doesn't do a rate hike this year, then really it's going to be very bad, I would say, for the US economy. Very, very bad. All right, guys. Well, there we go. Let's see where the pound against the dollar ends up. I'm still targeting 131.142. This is, you know, this is just again going from the past to predict the future. Stocks looking a little bit, maybe, you know, like they want to break to the low side, but the trend is still up. So again, I'd be dip buying the stocks just because there's nowhere better to put your money. And that's about it, really. I think it's just being very cautious in the minute, being in the volatility, in and out, you know, not taking long-term views. It's just too dangerous. All right, guys, well, hope you enjoyed it. I'll be back again on FX Street next month. You know where to find me if you need to ask any questions. All right, guys, have a great afternoon. I'll speak to you all soon. Thank you.